Hey, my name is James Baker, and thanks for being here. This question comes from our Ask Me Anything. We have a private, well, it's a public Discord server where every week, once a week, I answer all the questions that you guys have. So if you have questions about international taxes, investments, business, marketing, sales, all that fun stuff, mostly, specifically U.S. income taxes and sales taxes. I encourage you to click the description below, join the Discord, join the Telegram, and come to our next call. If you just want to see the video and see the answer to this question, you have a great video coming. So just subscribe to this video and let's go straight to the question.
So I'm going to completely hijack this question and talk and pontificate. Let me see what the next one is. Good. I'm going to hijack this question and answer a different question. And I'm gonna speculate on it, but what is the best way to own a real estate property in a foreign country? What is the best way for a U.S. taxpayer to own foreign rental properties? That's the question, because that's what we're getting to here. You need to know the local laws, and you need to assume you're going to pay tax on the profit locally, because as far as real estate is concerned, if you're paying taxes in Colombia, you can get a tax credit in the U.S. So if you're paying taxes in a foreign country because you have a foreign rental property, you don't lose that money. You get a credit for the equal amount in the U.S. So if your rental property makes $100,000 and you pay $30,000 in Colombia, you're going to pay no tax on that $100,000 in the U.S. because you're going to have a $30,000 credit. So it's generally pretty clear and easy to avoid double taxation when there's physical properties like rental properties. And that's the first explanation for this. The second part of this is you need to determine first how to best to legally protect yourself and your assets. So if you're buying a property in a foreign jurisdiction as a U.S. person, you need to determine, before the tax stuff is concerned, in my opinion, you need to determine the best way to legally protect your ownership of that entity, of that property. Because if you're buying a property in some country and you put it in the name of something else, but someone else can just take it or change it or move it, you need to protect yourself. So you need to talk to local property attorneys and local asset attorneys and whoever locally is to see how you can own it, and the best way to own it from a local tax perspective as well. Very often in these situations, my clients will have a foreign entity which will own the property. You could own it with an LLC in certain jurisdictions, which is great, but you still have to deed title that LLC up in their property transfer system. So often we have a foreign entity or an offshore entity that could either own a U.S. LLC for operational purposes, or you can have a foreign entity that owns the property, and then you just operate it all through a separate LLC and just keep it very basic in the foreign country. Because you need to first protect your assets, protect your investments. Number two is you need to have a really good operational structure so you have an easy way to collect rents and an easy way to pay for stuff that you need to get fixed. And then number three, you need to make sure your tax optimized in both jurisdictions, because if you don't own the property safely and you can't operate, then the taxes become mute anyways. So once you determine the ownership and how you're going to operate, the most efficient operation, then you factor in the taxes, maybe tweak the operation, but then you have to first determine local tax implications. And then the last step is really the U.S. tax implications, because locally, if you have to do it the right way locally, because that's where the property is located. If you don't obey the tax laws in the country and you own property in the country, then the country could potentially take your property. I don't know how it works in every country in the world, but that's my train of thought, and that's how I would do it. So this question is kind of skipping around the point. Not skipping around the point, but really trying to it's just jumping around between those three things. Once you confirm who owns something, then you can confirm how best to operate, and then you can confirm the other stuff. But having loans between different companies and stuff is fine. A loan is a great way to take money out of one jurisdiction without it being a dividend. So if you have to operate wholly from a Colombian company, you loan the money to the Colombian company, and we used to be the only way to get money into Colombia. And then to get the money out, you say it's a repayment of the loan. And that way it's not income to you, but it's also not an expense to the company. But it should be a way to get the money out without any withholding taxes.
there. I really hope you enjoyed the video. If you want more of this stuff, make sure you like and subscribe. And if you want to interact with me personally and join our weekly free calls that we have on the Ask Me Anything on Thursdays generally, click the description below and join the Discord and join the Telegram. I'll look forward to interacting with you and helping you grow your business, be more successful, and make more money. Thanks for being here.